All right. Hey, guys. Another day in the life. It is Wednesday. We are taking a look at crude oil. And the $1,000,000 question is, has it bottomed and it's going to continue higher now? Or is there more downside to come? And today's little pop has already topped out. Let's dive into the analysis. All right. So, starting out looking at a 4 hour, we did have these top dots, the PSAR top dots, which is a good clue. Came down, caught support right at this level that we've had on the chart for a while, caught support right on that level and bounced. And what I am looking at through the lens of Elliott wave is after such a strong impulsive move up off of the Tuesday, June 4th low, and we're counting this as an A wave. There's several different ways to view this, but we're looking at it as an A wave and then looking for a continued pullback. Now, this pullback right here didn't even make it to the 382 of this entire move up. So it would be unusual based on the structure of this move up that would be all of the downside, and meaning that we just are going to continue going higher. The way Elliott wave theory is seeing this, that would be unusual. Okay. What is more likely is a continuation lower to the 382, where you could then see another bounce before a continuation lower. And A waves typically target the 382 fib level. So we would need to look more closely at this wave structure in this area to try to get a handle on whether is this going to bounce further, or is this in a position where it can roll over again and come down here and get below 80. So what we're going to do is look at the lower time frame. So now we're dropping down onto a 1 hour chart where you can see a little more clearly, looking for uh, an A wave to come lower, or the idea that this is going to give us an A, B, C, and actually call it a B wave. If it's an A wave, the 382 is a likely target. If it gives up a full size ABC, then we can come down here lower, call it below 78 versus below 80. So if it wants to come deeper, we're going to consider that a B wave and look for an impulsive structure off of that low. So for the moment, the question is, has this finished going up? And one of the first things I can notice without taking any measurements is from this low, this is 3 waves up. So that in itself is a clue, because if this doesn't make a new high, actually, let's move this right to the top of that candle. If this doesn't make a new high from there, which is 82.66, if price does not get above 82.66, then there is still potential that this is going to come down and make a new low and keep going. So we still need more clues, because just the fact that this is 3 up in and of itself is not enough information. What about the internal structure in here, which we can't see on a 1 hour chart? So let's zoom in to a lower time frame and see what information we can glean from the internal structure right here. Because as you know, impulses is what we'd want to see. This C wave, the first leg at least of this C wave should be composed of something that looks like an impulse, which is a 5 wave structure, followed by a 3 wave correction, and then a continuation in the same direction as the 5 wave structure. So let's drop down into the 21-minute chart and look at structure. And in fact, let's drop down even a little lower than the 21-minute chart and really see some of the details. So, whoops. So what we're looking at right here is very clearly you can see this is 3 waves up. 1, 2, 3. And actually, this is a pretty interesting facet of Elliott wave. You see this blue fib right here? That is the 1.618 fib known as the golden ratio. What that is this top right here of this wave is 1.618 the length of this initial wave up. So in other words, if you took this wave up, the distance of this wave and multiplied it, you're going to come up with 1.618. Or another way to say is if you divide this into this wave, this long B wave right here is 1.618 the length of this initial wave up. Okay? So that's just how we arrive at the golden ratio. So what happened next was a move down. So we want to go down another level actually and look at the structure of this wave down, because the idea is if price has topped, we want to see 5 waves down, 3 waves up that does not make a new high. Okay, something else while we're looking at this degree of Elliott wave is if this were going to create another impulse higher, this would be 1, 2, 3. But this came down and got into the price area of the top of wave 1. Now, in Elliott wave speak, if you get any overlap of wave 4 overlapping the top of wave 1, it is no longer a standard impulse, and the best you can look for is a diagonal. Another thing to consider is a wave 4 is almost never composed of 5 waves. A wave 4 is almost always composed of at least 3 waves and can evolve in a complex manner. But the way this came directly down and got below the top of wave 1, the way I think of it, strongly rules out the idea that this could be a wave 4 with one more higher high to come. Now, that doesn't mean price cannot make a higher high, but if it does, it is not going to be considered a standard impulse. The best you could consider it is as a diagonal. So now that I've created a word salad, which happens a lot when you're trying to describe Elliott wave, let's drill down on one lower time frame and look at the internal structure of this move down. Now, I've already been doing this homework earlier this afternoon. So the way this measures very well as a 5-wave move down, and as you can see, it does encroach upon the price level of the top of wave 1. So it is invalidated it largely as a wave 4. So I'm counting this as 1, 2, 3, 4, and this wave 4 does not encroach upon the level of this wave 1. So this meets the standards of an Elliott wave 5-wave move down. And then now what you can see is at the moment, this is 1, 2, 3 waves. At the moment, this is 3 waves up, and it has not made a new high. So if we want to keep this really simple, which is my goal, the name of my channel is Elliott Wave Made Simple. Let's put a ceiling in up here at the top of this wave, because that is going to be an important level for us. And actually, let me just get rid of this. Just keep cleaning this up. Keep it very simple. We don't want to see price come up and make a new high if this is going to play out per the larger structure, which I was just showing you. And if it is going to play out, what we are going to see is a break of this low right here that we formed. So 5 down, 3 up, that does not exceed. Now look, I'm going to take a measurement here because I'm curious if this is 1 up, 2 down. I want to see 81.99. I want to see where does the 100 fib come in. So I have some standard settings. So if this is an A, B, C corrective wave, 3-wave move, this is a reasonable target. So can this move up a little bit more and come into this zone? Sure. I'm going to check one additional fib, the 1236. That also would not make a new high, but it sure would come awfully close. So ideally, price gets rejected very soon and continues its pathway lower. This is the beauty of Elliott wave. Elliott wave is not predicting the future. What it is really good at is giving us parameters. So, for example, if you were looking for a long trade in the European session tonight or the Asian session tonight, taking a short entry anywhere up in here and putting the stop just above that high, because the structure for this wave count at the moment requires the price does not get above 82.66. Okay. So as long as price gets rejected in this area and then begins another impulse lower, very similar to this impulse lower, but starting from anywhere from now until later, usually price goes sideways after 5 p.m. New York time, all the way through about 8:30 p.m. There's like a 3-hour, 4-hour window where price is just listless, directionless, and just kind of drifts around. I never trade during that time frame. But what I will be looking at tonight in the Asia session is for price not to make a new high over 82.66 and get below the floor, the current floor of 81.77. So if you're looking for your parameters, 82.66 is a ceiling, 81.77 is the floor. So what we'd want to see is price come down in a 5-wave structure similar to this and get below this, what I'm calling the pivot area. If price can get below this pivot area in an impulsive 5-wave structure, it becomes much more likely that we are in this degree, a 1, 2, and as you know, the wave 3 is the strongest, longest wave in an impulse, and a wave C, a C wave, right, of this, which would be this blue C wave, should be composed of an impulse, 5 waves impulse. So all we are doing now at this much more smaller degree stuff is looking for the initial clues of 5 down, 3 up, another wave 3. So this is 1, 2, 3. And the wave 4, now I'm getting ahead of myself, but I'm just teaching here. The wave 4 should not encroach upon the level of wave 1, which is 81.77. So once this comes down and makes a new low, if it does, the retrace can come back up and test this pivot without getting above 81.77. That's if it is going to be a standard impulse lower. So really, the 1-hour time frame is typically the most reliable time frame, because why? On Elliott wave speak, when you get into that nano counts, it is less reliable. Elliott wave is much more reliable on the 1-hour time frame up, looking at these degrees, than it is looking at the nano stuff. However, as a day trade scalper, I'm always looking at the nano stuff, but I keep it in the back of my mind that it can be wrong. For example, if you just take a simple measurement of this bottom at 80, 81 and put some fibs on here to see where this current price has bounced to, right? Typically a B wave typically comes up to at least the 618 and usually gets into the zone between the 618 and the 886. So even though I like this as 3 up, it doesn't mean that this B wave can't come up higher into this zone. Okay. Now I know I'm giving a lot of what seems like conflicting information, but it's just the parameters. At the moment, this is allowing for this to be a slightly shallower B wave than you would normally see, and that's fine because of the internal structure. Actually, look at that. It tagged the 50% fib. Let me see. That high is 66 and this is 6. It's tagged it to the penny. Price came up, retraced half of this wave down, came back up in 3 waves and tagged the 50% fib to the penny and got rejected. That's just what it is. So, would it be more would it been had it been better if this was a 3-wave structure that stretched up into here? Yeah, it would have been. But it doesn't mean that this already invalidated itself as an impulse because this low encroached upon the level of this wave 1. So this can come up higher and still not be an impulse, and it could still be a B wave. So the best we can do is just be mindful of these parameters that I've already given you and see where price develops in the Asia session tonight and the European session. And my plan, personally, is to wait until later this evening and take a short. Now, if you really want to be safe for a short, following Elliott wave guidelines, is wait until price gets at least below 81.77. And if you want to be a little safer, let it see if it doesn't make a new high or even get up into these yellow fibs and let it come down impulsively. And then take a short below here and put your stop. Now, look, this may sound crazy to have your stop so wide, but if you trade a small position and get short below here, just call it 81.70, short 81.70, and put your stop all the way at the top of wherever this wave tops out. Why would you risk so much? That's almost $1 or 100 pips. Well, the reason is because you're risking 100 pips because if this plays out and you got short up in here at 81.70, it's not unlikely for you to be able to catch a $3 move, so 300 pips. So you'd be risking 100 pips to catch 300 pips or more, actually. So that would be more of a swing trade. But as a scalper, my plan is to see what the price action is looking like tonight at the Asia Open. And if it's still, I like that this is overlapping itself because this does not lend itself to being an impulse, even though, of course, it can go higher, but it's not going higher as an impulse. So I will just short it from somewhere else. But my bias at the moment is to be short because of what I was saying on this longer time frame. The odds of this being all the pullback you're going to get, which didn't even make it to the 382. Actually, let me look and see where the 236 is on that. All right, so it dipped in below the 236. So this could be a wave 4 of some type because this would be where wave 4 would terminate. But I don't really like it as a wave 4 because of this structure. Doesn't bode well for this being the top of a wave 3. This bodes well as being the top of either an A wave or a 5-wave impulse, and either one would suggest a deeper pullback. So you put all the pieces of the puzzle together, stick to the ceiling, stick to the floor. Let's see where we end up. All right. Thank you so much for watching. If you want to keep getting updated, you know the deal. If you subscribe, you're going to get notified when I make these videos. I'm also covering silver, gold, NASDAQ, Bitcoin, a few other instruments, a few Forex pairs. So thanks a lot for watching. And if you have questions about this, drop them in the comments. I'm going to answer you, I promise. All right. Thanks a lot for watching and good luck. Bye-bye.